This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend. It's great to have your company today. I'm Ross Greenwood. On the program, we delve deep into Australia's past to come up with some of the questions the Albanese government needs to answer over the next 3 years. What's clear is that the Labor Party has a strong mandate to deliver its agenda. But what you'll hear today from union and business leaders is that it needs to be bold and make far-sighted decisions. Anthony Albanese's legacy as a Labor great is already firmly established with his election win. Now it can become a national champion by giving our country the settings it needs to make it competitive and productive for decades to come. So the people we turn to today who help set the agenda for the government run some of Australia's oldest institutions. There's Paul Farrow, Federal Secretary of the Australian Workers' Union, formed in 1886 as the Shearers' Union and integral to the establishment of the Australian Labor Party.
We just need them to be bolder and take more risks. I think there's a real generational opportunity here for Australia.
Then there's Sanjeev Gandhi, Chief Executive of chemicals and explosive company Orica. It was formed even earlier than the AWU in 1874 on the Victorian goldfields and now is one of the world's largest explosive suppliers.
All of that cannot happen day one. It is a transition, it takes time, and we need to ensure that we do not stumble during this journey.
And we also speak with Andrew Irvine, Chief Executive of the National Australia Bank. It was founded in 1856. He only took the reins of the bank last year, and we'll get his view about what he sees as the priorities of the Albanese government.
We're seeing it takes something like 20 years to get a mine up and running from conception to production, and that's just far too long. And if it continues to be that way, global mining companies are going to allocate capital to other jurisdictions.
And we also look at a serious problem for Australia's stock exchange operator, the ASX. More companies are leaving or being taken over than are joining the stock market boards through IPOs. So alarming is the situation, the ASX now wants to change its rules to make it easier for local and foreign companies to raise capital here. But not all are convinced that it will work.
That's the issue they need to resolve. And guess what? They are being gamed. Stop being so naive.
And given Oscar Piastri's stunning start to the Formula One season, leading the Drivers' Championship, it's kick-started a renewed growth in motorsport of all types here in Australia. But look, we're going to start with what I think is the greatest political opportunity that Australia's had for 20 years or more. The Albanese government's victory is quite comprehensive. If it takes its opportunity now, it can create an economic legacy for the nation that could equal Hawke and Keating, Howard and Costello. It can accomplish this by its complete control of the House of Representatives and by teaming with either the Coalition and or the Greens to pass its legislation in the Senate. But as you'll hear this morning, it needs to be ambitious, aspirational and politically agnostic as it sets about its agenda. If it succeeds, it can cement Labor in place for a decade or more. So let's start with the union movement. Australia's oldest union is the Australian Workers' Union. It's also one of the most pragmatic when it comes to policies needed to keep its workers in secure, high-paid jobs. Its Federal Secretary is Paul Farrow, and this week I asked him what he sees as the Albanese government's most important priorities.
We need the government to be thinking big. You know, I think the last term of the Labor government showed some really good foundations that have been laid in place. Future Made in Australia, Net Zero, Authority, those types of things are there. Investment in steel, in aluminium. So we're sending the right signals. What we need now is to start building on that. We need to actually turn that into the real fundamentals of what does Future Made in Australia look like, how are we going to incentivise to keep our industries here that are here now, and how are we going to incentivise to get new industries and new emerging industries into Australia.
Does it trouble you that Australia in some ways lacks competitiveness, that capital is leaving Australia, that big Australian companies and manufacturers are choosing to invest, especially in the United States, versus here in Australia?
Yeah, absolutely it troubles us. I mean, that's our members' livelihoods at the end of the day. But I think we've got to look to, if you look to China and say, why are they so big in solar panels? It's not through industry itself, it's through government intervention and government assistance. Germany didn't become the leading car manufacturer based on anything other than government assistance. The US leading aviation or space is through government assistance. So we need, I think, this thinking that governments should just stay out of the way and let industry do their own work. We're at a critical point in our country's sort of future to look where we need government intervention, we need government investment to prop these industries up, to incentivise them and make sure that we're going to have that competitive advantage into the future.
Okay, but I'll take steel as one classic example. The government stepped in to save the Whyalla Steelworks, but there is such a vast amount of steel likely to come to Australia from China, from Vietnam, because of the tariff wars and the tariffs that Donald Trump has imposed on those countries. They've got surplus steel that they can't send to America. They're likely to send it here. That, of course, could kill off our steel industry unless something happens.
Absolutely, and that's why we need to focus on our anti-dumping legislation. We need to strengthen that. We can't have dumped steel or dumped aluminium. We've seen what's happened in the glass industry with Oceania down in Victoria. We can't afford for that to happen. So we need strong measures that protect those industries. And we also need to strengthen them as well. I mean, we are spending tens of billions of dollars each year on infrastructure of new, when it comes to energy. What we need to see is procurement measures being changed as well, so that money that is being invested in that type of infrastructure should be made with local content as well. There should be Australian steel in every wind turbine, in every solar farm that goes up. There should be aluminium in those products as well. So what we need to see is some major reform where we're helping those industries that we know need assistance by changing the rules around procurement, and we need to make sure that we've got good protections. It's great having the front door open for future made in Australia, but it's no good if we're pouring all that money and we've got our back door open for it to all just flow out the back door because we've got no security measures in place around dumping and those types of things.
I was going to ask you about that because the last 40 years of prosperity in Australia were built on literally that open front door, on Australia being a free trade sort of a nation. One of the issues now is if we do start to close up, we might be accused by, in particular, the United States of putting in protectionist measures. Do we have to also be a little cautious about that?
Well, I think the world's ever changing. It's certainly changing under Trump. But Trump's doing the same thing. Trump's making sure that he's protecting, or in his view, others might disagree, but in his view, he is putting measures in place that are going to protect industry or grow industry in his country.
So what you're saying is that maybe the Albanese government could take a little bit of the Trump rhetoric in make Australia great again.
Yeah, I'm not sure that I would say the Trump rhetoric.
I don't think you would.
But we need to look after Australian industries, and I think there's a strong message from the Albanese government that by saying we need a future actually made in Australia, that they are willing to invest, and they've shown that. They've shown that through billions of dollars worth of investment currently in steel and in aluminium. We just need them to be bolder and take more risks. I think there's a real generational opportunity here for Australia. I think we need to sort of change the narrative on some of these things as well, where we've been, when it comes to budgets in this country, we like to hear that the government's running a surplus. I hate hearing that. That means that they're not spending the tax money that we're giving them, right? Like I personally don't have a surplus in my family budget. I'm in deficit all the time. I've got mortgage, but I know in the long term that I've made investments through buying a house and having a mortgage that will pay off in the long run. Now we know when it comes to energy reform in this country, this is not something that's going to happen overnight. So we also know that if the government invests in the right places, that it will pay off in the long run for Australians.
Can I take you back one step? Because you mentioned earlier a company called Oceania Glass, which have been going for more than 100 years. The same thing with Qenos, Australia's only maker of polyethylene. To have lost those two key manufacturing plants during the last term of the government, to me, was not a good thing. These are not good things to lose. The question is what the government should do to make certain that those types of businesses do not collapse. It's not necessarily intervention as such, it's trying to make them more competitive.
Yeah, and I think, unfortunately, I think we'll see a few more of those in the short term. Because what we're dealing with is companies that have been struggling for a long time. And let's face it, these are companies that operate in a high energy intensive area. And what are they facing? They're facing increased costs in energy.
But that seems nuts to me as well. We have so much energy in this country, and yet businesses going broke because of the high cost of energy.
Absolutely. And I think that is years and years of inaction on this front. And so what we're seeing now is an accelerated effort to try and catch up, and we need it to move faster than what it actually is moving. We've seen gas drop off the agenda. One thing that, whilst Dutton talked about a gas reservation policy, some would call it an imitation reservation policy, didn't actually deliver, wasn't going to deliver what we needed, but it was on the agenda, and I think we need to bring that onto the agenda as to how we actually look at making sure that gas in Australia is reserved for industry at an affordable, competitive price that gives them that competitive advantage.
And does that also mean trying to make certain that where there are new gas reserves in Australia, that environmental approvals can get through the courts and get through the system much more quickly than they currently
absolutely. We need to deal with the environmental approvals so that we're giving some certainty to business in that space, that they're not going to be tied up and litigated when they're investing in that space. But we also need to send a clear message to all our industries that as a result of having rich deposits of gas in this country, that we will still have an abundance of gas to export to the rest of the world. But what we should be doing is making sure that any new explorations that come on board, a portion of that is reserved for domestic use and domestic use only. And as contracts expire and are renewed, then a portion of that gas is set aside for the domestic market. What we were looking at under the Dutton proposal was just the spot price gas, which is a tiny, tiny fraction of what's left over after we've done all our exports, which is not going to in any way help industry at all. I think we know that we're going to need gas firming power in this nation when renewables are online. So taking action on that now will be the quickest and easiest things to bring energy prices under control and send a message to industry that we're actually doing some things in this space where they know they're going to struggle.
So bottom line of this is your message to the Albanese government coming into power with a big mandate: be bold, go hard, do some big reform. Invest,
and I think they want to invest. And I think I've heard the Prime Minister talk about it on many occasions. His big mantra is "Future Made in Australia." It's a great message for us. It's a great message for people to have some hope that I think the last time we spoke, we talked about the effects of COVID and people having short memories. We need to look at our sovereign capability. We need to make sure that we can build things here. We're not relying on other nations, but we don't have to look that far to see where people are leading, where countries are leading their industry. And it's through government investment and intervention in the early days. Those companies are now probably, surviving on their own and thriving on their own. But to get where they are today, it's been through government assistance and government intervention, because somebody can see that there's an opportunity there and we're going to seize it. So we need to, I think, look that we can see the opportunities in front of us.
Paul Farrow, always good to chat to you. Many thanks for your time.
Thanks,
today.
Ross. Always
thanks
a pleasure.
lot.
Excellent.
This week, several of our big banks, Westpac, the ANZ and the National Australia Bank, reported their half-yearly profits. Westpac's profit of $3.3 billion, to be fair, underwhelmed the markets, with the result that banks' shares were broadly sold off in the early part of this week. The National Australia Bank, Australia's biggest business bank, said its half-year earnings were up 1% to $3.6 billion, but its net operating margin was squeezed a couple of points to 1.7%. The interim dividend there was increased a single cent to 85 cents a share. But look, in a low-growth economy, it's hard for banks to achieve better returns, even though distressed debt remains at historic lows. Well, this week I caught up with NAB's Chief Executive Andrew Irvine and got him to lay out what he sees as the government's priorities.
Well, I think what we're seeing right now in the domestic economy is reasonable growth. We expect Australia to have GDP growth around 2%, maybe a touch higher than that over the course of 2025. That would be more than double last year when we were more like 1% growth. And that would compare reasonably well with most of the other economies in the developed world. Obviously, we're dealing with pretty significant geopolitical uncertainty these days. A few weeks ago, the US administration announced very significant tariffs on imports from most other countries. That's, I think, bad for the global economy. And just this morning, we saw military tensions flare up in the Indian subcontinent between India and Pakistan. All these things, I think, are, on the margin headwinds for global economic activity, and Australia is not immune to these things. So at the end of the day, I think we're doing reasonably well, but obviously the more we grow, the better for our customers, better for households, and also ultimately the better for us as a bank.
So the election last weekend gave an overwhelming mandate, you could argue, to the Albanese government. So therefore, it may be more emboldened in a second term to do more of the form that business leaders have spoken about. If you had a wish list of things that you'd like to see achieved by a very strong government, which this Labor government will be, what would they be? What would you be telling the Prime Minister?
Yeah, well, look, first of all, I'd like to extend my congratulations to the Albanese government and to the Treasurer. We've had a good working relationship with the government in their first term, and we look forward to that continuing in the next Parliament. I would say that I was delighted to hear the Treasurer talking about productivity being a more important focus for the government in the next Parliament, and I think that's really important. Despite how well we've done as a country over the last few years, productivity has been a real challenge for us. And ultimately, productivity is the biggest driver of living standards for everybody. And we need to see productivity improve in a number of areas. Housing, I would point to, as probably the biggest area of concern. We're struggling to get enough dwellings built to house both newcomers to our country as well as young Australians with dreams and aspirations to enter the housing market. So that, I think, is job number one. I'd also like to see more policies that would simplify and reduce the timeline to get mining and energy projects through the cycle. Right now, today, we're seeing it takes something like 20 years to get a mine up and running from conception to production, and that's just far too long. And if it continues to be that way, global mining companies are going to allocate capital to other jurisdictions. And we have the resources the world needs. We have the future-facing resources that will help the world decarbonize and move to a less carbon-intensive future. And we need to get them and deliver them to the rest of the world. So we want to see those mines, that mining being done in our country versus somewhere else. And the same is true for energy. Renewable projects are still taking far too long. Natural gas, which is going to be an important fuel in the energy mix, I think, for years to come. We need to be a provider of those things for ourselves, for the domestic economy, but also for the international economy. And the more we can help speed up and get these into production, the better for our country.
So then, because the win in the election for the Labor government was so big and so strong, it really almost should embolden the government to take on many of these things that you're talking about, you'd imagine.
Yeah, that's certainly what I would hope to see, that we will see policies enacted that are in the long-term interests of our economy. With the strength of the mandate and the majority that the Labor government now has, I would love to see really strong policy positioning from them over the next few years, and we stand ready to work with the Treasurer, with the Prime Minister and with that government to deliver those policies for Australia.
Okay, so then take me to something else that happened late in the election campaign. S&P Global Ratings came out and issued a veiled warning about Australia's AAA credit rating because of the spending from both sides of politics that was committed before the election. Does that potentially make it harder for you to raise funds at the right price overseas to be able to keep competitive in this marketplace? Not just you, but banks generally here in Australia.
Right. Well, look, first thing to have as context is that Australia is actually one of the very few countries in the world to have a AAA credit rating. In fact, you can count on less than two hands how many countries do, and we're uniquely placed to be one of the very few that does. So that's the good news. It is also true that in order to retain that credit rating, we've got to continue to show fiscal prudence, not just at the federal level, but also at the state and local government level. Federally, the reason we have a AAA rating is that our public debt to GDP as a country is still pretty low compared to other global comparables, and it's important that stays that way. Because if we do lose the AAA credit rating, you're right to say that the cost of borrowing will increase. It would increase for the government, and it would also increase for us as banks. And ultimately, were that to happen, it would manifest in the main street for the average Australian looking to borrow. So let's hope that that doesn't happen, and I'm confident that the government will retain the fiscal prudence necessary to retain our AAA rating.
Many thanks for your time today.
Thanks for having me on the show.
And this week, one of the most strategically important companies in Australia reported its half-year earnings. Orica is one of the world's largest explosives manufacturers. It said net profit rose 40% to $250 million. The company, which, as I said, was founded on the Victorian goldfields in the 1870s gold rush, is today truly a global business with 14,000 employees. Now, look, Orica has choice about where it invests its capital, and though it wants to, it right now can't justify spending the shareholders' capital here in Australia. I caught up with Sanjeev Gandhi, Orica's chief executive, and just asked what is needed for him to change that attitude.
Look, what businesses always want is stability and continuity, and with the government getting re-elected, that's what we are getting, so that's extremely positive. Now, this is a huge opportunity to put into place clear measures for all the policies that were put forward in the first term. As an example, future made in Australia. So if you want to have a future made in Australia, manufacturing very clearly needs cost competitive energy, electricity prices, cost competitive natural gas, and enough availability of gas, and obviously skilled labor. So if we can address those policy issues, I'm very, very confident that manufacturing will not just survive and thrive in this country, but then we, as manufacturing owners in the country, will be encouraged to do more in Australia. So let's get the policy clear. Let's ensure that there's enough gas, cost-competitive electricity, and then we will also then plan for the transition into renewables and decarbonisation. All of that cannot happen day one. It is a transition. It takes time, and we need to ensure that we do not stumble during this journey.
Okay, so you are one of the clear companies, Orica, as not only a beneficiary, but a likely agent for change into the transition into renewable energy. Now, one of the important aspects of that is potentially hydrogen production. Quite clearly, it's going to be into the other gases and the other products that you make as well. So ammonia being one of the key ones. I just want your sense as to how the government, or what the government needs to do to ensure that doesn't go off track.
Yeah, so there's several things they need to do. I mean, let's start with hydrogen. At the moment, the costing on hydrogen is such, green hydrogen I talk about now, that you cannot economically make green hydrogen unless you get subsidy both from the state and the federal government. So the first prerequisite is obviously to ensure that there's enough funding for industries like ours who've got ambitions and who've got plans to make green hydrogen. And this means both OPEX and CAPEX funding, so that we have a feasible project, an economically viable project to make green hydrogen. Now, the more green hydrogen we make, the less natural gas we use. So you see the transition starts already here. And then you start to scale that up over a period of time. You get more competitive, and then you start reducing your gas consumption, which also helps with decarb. So all of that comes together as long as there's a very, very clear strategy. How do you do that? But that's not the only principle. You need cost competitive renewable electricity. I just heard about the announcement from New South Wales that they're investing in 10 new projects for renewable electricity. That's great. But continuous manufacturing cannot run on renewable electricity. We need constant electricity supply 24/7, 365. So we need firming. This could come from coal, this could come from gas, this could come from hydro, it could come from batteries. But that is infrastructure the government needs to build in and invest, so that we are encouraged to take even more renewable electricity. Then we need water, cost-competitive water, which doesn't compete with potable water. So there's a lot of elements involved just in getting green hydrogen going in this country. Orica is fully committed. I'm looking forward to negotiating and talking with our ministers, both state and federal, once the dust settles now on the elections and we have clarity, and hopefully we'll push ahead from there.
And then you do not live alone, and Australia does not live alone. You have got similar deals being offered to you by other countries right now. So Australia's got to be pretty fast and nimble if it is to actually attract the capital and the business in these transitions.
No, you're absolutely correct. I mean, just look at what's happening in the United States. They are pro-manufacturing, they are pro-mining, they are pro-infrastructure. All of that is where Orica plays. And they've got very, very cost-competitive energy prices. So given a choice, my incremental dollar would always go first to the United States, and Australia doesn't come on the top of the list. Now, by addressing these policy issues that we've had in terms of giving us clarity, ensuring that companies like Orica, and you know that we consume natural gas to make products. We do not make electricity out of it. So if we can get enough gas supply at cost-competitive prices, my next dollar comes into Australia. And then I'm able to support with my know-how, my knowledge, my technology, the transition away from fossil fuels. So it's all a matter of getting the policy right.
But then go to your end product. Your key end product is explosives. The fact of the matter is right now there has been significant mining and a significant mining boom in gold in particular. And oddly enough, with that boom to record prices of gold, you have been one of the key beneficiaries.
Absolutely. Not just gold, but also copper, because as you can imagine, data centers, AI need a lot of copper for electricity transmission. My two biggest product portfolios in terms of resources is gold and copper. And obviously the macros for gold and copper are very, very positive globally. So, and then we've made the acquisition in the United States, where obviously there is a new boom coming in mining. They've got a new policy called Fast 41, where they are fast-tracking mining projects, which have been stuck up with, with regulations and permitting and environmental issues. In the last 2 days, they have nearly fast-tracked 20 projects. Now, if these projects get commercialized, Orica benefits because we are a big player both in the gold and the copper industry. Australia needs to catch up very quickly.
So therefore go to the tariff situation. Given the tariff is protecting US industry, you manufacture in the United States, where do you see yourself in terms of those tariffs? Are you a net winner or a net loser out of the tariffs?
Look, in the end, we are kind of agnostic to tariffs because, as you said, in the United States, we are self-sufficient. We either buy local or we make local. We do the same, by the way, in Australia. We either buy or make locally. So local content in our industry is extremely important because our products don't travel easily. So in that respect, we will not be impacted by the tariffs. Now, tariffs are a very blunt tool, and my concern is more about the cost impact of supply chain disruptions due to tariffs. Costs go up, prices go up, the consumer pays more, and if the US consumer stops buying or reduces buying, that has an impact and implications for the global economy. That's something to watch out for. Direct impacts on Orica, not so much at the moment.
Okay, but that being the case, as we sit here now, what you've just told me is that if you have spare investor capital, you're putting that capital in the United States. You're not putting it in Australia until the government fixes some of these fundamental issues in terms of energy, in terms of water supply, in terms of key things that you require here in Australia.
Absolutely. Productivity is a key concern, right? All manufacturing industries are suffering from poor productivity, higher labor costs, higher energy costs, inflation across the board. These are things that need... So we need to be competitive because we are competing in the global field. My products go to more than 100 countries. They go to more than 509 sites all over the world. I'm competing with domestic competitors out of the United States, out of the Middle East, out of Europe and Asia. If my products are not competitive, I lose. So it's extremely important to support local manufacturing here, that manufacturing stays competitive in the country.
So that is the absolute key. But then the results you have just released this week, they clearly show that you've got a pretty decent return on your equity. But of course, you've always got an eye to try and improve that. Are there ways in which you can do this without necessarily moving capital around? Are there other acquisitions you need, or is it simpler that you stick to the knitting that you've got now?
Yeah, I think I'm happy with the portfolio we have built over the last 5 years. So we've got 3 vertical business segments now. One is our core blasting business. We've been doing this for 150 years. We've now got a digital technologies business, which is focused on providing services to the mining industry. And we've got specialty mining chemicals, which also supports the mining industry, the gold business we talked about. So I'm very happy with the portfolio. The focus at the moment is to maximize value, find ways to cross-sell and scale the businesses up. And that's what's leading to the great results the team has delivered in this half. And I'm expecting that momentum to continue because the demand for our products and services will only increase. The demand for commodities is increasing. There's not enough supply because the resource industry is underinvested, which means we need to get more out of what we have today. And that's all about productivity. That's all about efficiency and sustainable mining. And Orica is number one in those fields.
Sanjeev Gandhi, Chief Executive of one of Australia's oldest and indeed most historic companies, Orica. Many thanks for your time today.
Thank you, Ross. Thanks for having me.
Coming up after the break, our stock exchange is losing companies. Now the ASX is trying new tactics to encourage local and foreign companies to raise money here. But not all investors are convinced it'll work. Thanks for being with us here on Business Weekend. For many companies and executives, a listing on the ASX is more of a curse these days than a blessing. There's constant scrutiny, red tape and onerous reporting rules, to say nothing of investors' impatience for returns. And that's why a corporate life in private equity ownership can often be a happier place to do business. Now, though, the ASX is on a mission to revive the listings market. The question is, will it work? Ingrid Willings reports.
Australia's ASX has a big problem. Our stock exchange listed companies are disappearing. Not just disappearing through takeovers, but not enough new companies are appearing through IPOs or company floats. As Rachel Waterhouse, Chief Executive of the Australian Shareholders Association, says, boards and company owners have been calling for less regulation when it comes to listing a company.
There is some belief that maybe it's global and maybe it could be cyclical, but it's a trend that we don't want to see continue for retail shareholders. It could be due to regulatory burden of being a listed company. That's what we often hear from companies about listing in Australia, that there is that regulatory burden compared to private markets.
Corporate watchdog ASIC says the number of ASX-listed companies fell by 145 to 1,989 in the 2 years to the end of last year. That is the biggest two-year fall in 40 years since the 1990s recession, and it's not letting up. In the past 3 years, some of Australia's most famous companies have disappeared as options for investors. Oz Minerals was swallowed by BHP, Afterpay by Block, Crown by Blackstone, the old Leighton Holdings, now CIMIC, by Germany's Hochtief, Boral by Seven Group, Alumina by Alcoa, Adbri, Adelaide Brighton Cement, by the Irish CRH, and our largest funeral business, Invocare, by TPG Capital.
Certainly flags an area of really close interest for ASIC. We're very conscious of this trend. It's a global trend, which you're probably aware of, that the rise in private markets tripled. Numbers have tripled over the past decade globally, but it's also very much an Australian trend. And in Australia, we've seen both a decline in the number of listings and the number and value of IPOs over the past decade, and a significant rise in the private markets, whether it be private credit or private equity.
So the ASX is now on a mission to revive the new listing market, aided by ASIC.
Where there are actionable ideas that mean without changing the risk profile and the impact on investors knowing what they're investing in with confidence, if there are actionable ideas for us, we're absolutely open to taking them up.
Boards and business owners are calling for less regulation, fewer hoops to jump through in order to list. The alternative, a private equity takeover, is often way simpler. Simon Mawhinney, the Managing Director of investment fund Allan Gray, is sceptical and thinks one issue he sees is whether existing ASX rules are being used for the purpose they were set for.
The other thing, which is astonishing, is the 100% issuance limit until a vote is required. And the ASX has taken a particularly utopian view of the world, which says, we don't think the rules are being gamed. Well, okay. I disagree, but let's for the moment say I do agree. And let's categorize a good and a bad rule. A good rule is one that can't be gamed, and a bad rule is one that can. And even if these rules aren't being gamed, they can be gamed, and therefore they're not fit for purpose.
Yeah, that's the point.
That's the issue they need to resolve. And guess what? They are being gamed. Stop being so naive.
Compared with the global universe, most ASX companies are relatively small businesses. These also have the greatest upside from private ownership and not public listing. But now, because of the scale of global private equity players, virtually no Australian company is safe from a hostile takeover.
At least one other big factor involved is the very significant trend towards passive investing. And if 50% of the market, say, and it's not that big, but if 50% of the market is passively focused, then 50% of the capital is no longer interested or active in new IPOs, because IPOs typically aren't initially included in an index that a passive investor will follow. So, the pool of capital that used to be available to IPOs is not as large today as it was 5, 10, 15 years ago.
So investment banks are pushing the ASX and ASIC to overhaul the listing process to give potential new entrants an easier time. But there are aberrations, and the dual US-Australian listed building materials company James Hardie proved that just recently. It announced a $14 billion merger with US decking and railing company AZEK. For many investors, the problem is that James Hardie will not put the deal to shareholders for approval. Adding salt to the wound, the ASX waved through that exemption for a shareholder vote.
It's not uncommon in Australia for large deals like this to happen without shareholder votes. And I think that's the issue here. And I don't think it should be muddied with the deal itself. The stock market mostly thinks the deal does not make sense or that James Hardie has overpaid for it. But the issues are more principled than that. And there's a strong push to try and avoid this kind of thing happening like this again.
And that's why retail shareholders should be consulted, according to the ASA.
It's really important that retail shareholders have a say when it comes to acquisitions of companies, and that companies such as James Hardie take all investors seriously in their engagement with them.
If it can remedy this loophole, Australia would be put on par with other global exchanges.
In other countries, the UK, the US, you cannot do deals of this magnitude without the shareholders of both companies voting on the deal. And that seems like a reasonable path to take from the perspective of the ASX.
Perhaps in reaction to the investor pressure, the ASX this week outlined some remedies to these concerns for new listings. These include allowing financial forecasts to be optional, reducing the required minimum free float of shares, accessibility in the bond market, adjusting size thresholds for foreign exempt listings, new frameworks for market sell-downs by founders. It also mentions consideration of so-called dual-class structures for foreign companies. The ASA's Rachel Waterhouse has welcomed the review.
It's interesting to see that maybe an IPO listing could have a truncated period of time. That could help with listings, but just being open to thinking about how there could be more listings is really important as we see more funds going to private markets.
UniSuper's John Pearce also responded, but he wanted some tightened rules in some areas. He said when shares are being issued, the shareholders of a company should get a say in any transformational deal, let alone a value-destroying deal. The aim is to increase the number of new floats on the ASX and to encourage more foreign companies to list here and raise funds. But it's a double-edged sword. Some local companies are also willing to list overseas and raise funds there, but even that causes problems. Rio Tinto is the third largest company on the ASX, valued at $186 billion, but its primary listing is on the London Exchange. Activist funds have agitated for the dual listing to be scrapped to trade solely on the ASX, where the shares have historically traded at a premium. But shareholders and the board rejected the push, but more such moves could be likely. And though ASIC has taken the ASX to task and to court over the mishandling and the replacement of its CHESS operating system, there is agreement about promoting the local stock exchange into the future.
We really want a thriving public market here. We want to be attracting and retaining listings and have companies able to access capital on those boards, including international capital. But also, if private markets are going to be a global and permanent structural change, then we want ours to be markets you can have confidence in.
Look, as Ingrid said there, we're disappointed the ASX didn't speak to us for that story, especially at a time when it's seeking to rebuild the confidence of investors and companies. We think it really should have done better. Coming up on Business Weekend, McLaren's Oscar Piastri's success in Formula One has sparked a resurgence of interest in motorsports of all sorts here in Australia. Up next, Ed Boyd catches up with the boss of Australian Motorsport, who oversees an $8 billion industry. It's good to have your company here on Business Weekend. The success of Aussie Formula One driver Oscar Piastri has generated a record amount of interest in Australia's $8 billion motorsport industry, which relies on passionate fans to take part in events, races and driving programs. Peak Body Motorsport Australia sanctions almost 3,000 events each and every year and has a direct involvement in organising everything from rallying to the V8 supercars to the Formula One event. Edward Boyd caught up with its chief executive, Sunil Vohra.
Motorsport in Australia is a very broad sport, and it spans everything from local club events that happen across every weekend across the country, and it can be rally or carnicross or test days on circuits. There's a wide variety of clubs that are affiliated to Motorsport Australia that go racing every weekend as a community sport. But of course, Motorsport Australia's remit expands all the way then through to state-level championship racing across the different disciplines, and then up into the national categories that people may be familiar with, some of the GT3 racing that happens in the Speed Series, or of course supercars is one of the most popular and well-known forms of racing. And our remit then extends into the International Series all the way up into Formula One, which takes place in March every year at Albert Park.
All right, give us a sense of the calendar. I mean, how many events are we talking about over the course of 12 months?
So Motorsport Australia sanctions nearly 3,000 motorsport events over the course of a 12-month period. The season really gets underway towards the end of February, and there's a real clutch of activity that happens across those sort of autumn and winter months, culminating in championships coming to a close around that November, December timeframe. It's a very busy schedule. Lots of events happening every weekend and across all sorts of disciplines of the sport. So everything from, red dirt, off-road racing, all the way through to rally and forestry racing, and then into the circuit-based racing that, people would often see on their TV screens.
Yeah, and then how are you guys actually funded at Motorsport Australia? Do you rely heavily on sponsorships, for example?
So our revenue base is made up of a few different buckets of income. The primary method that Motorsport Australia uses for funding its program and operations is the licences and the permits associated with going racing. So licence holders who are licensed to be able to compete at the different levels of the sport and across different disciplines. And then, of course, we have permits. So the permit structure is from organising clubs and promoters who pay Motorsport Australia a fee in order to be able to utilise our rule set, our technical regulations, and often then our officials to support the way that they go racing in a fair and as safe as possible sort of way. We also have a number of corporate partner and sponsors attached to us as an organisation. And in 2024, the year that we've just completed, we also had revenue associated with event promotion, where Motorsport Australia was actually also acting as the promoter for a series of national championship events. And so there was a series of revenue associated with that. But also, of course, those events come with a significant cost structure to service as well. And that was part of the story for us in 2024 in managing that cost base, which is quite volatile when it comes to events, and making sure that we could still deliver a good result to the members.
Yeah, we just had a slide showing your recent financial results up on the screen. It looks like you've done a bit of a financial turnaround there. What's sort of changed over the past 12 to 24 months?
So there was a few things that led to that turnaround. In 2023, we had a trading loss of just over $1 million, which is clearly unsustainable for a small member-based organisation. It's really in our interest to have that financial stability that allows us to best serve the sport. So 2024 was really about focusing the organisation about strong financial controls, a really proactive mindset and approach from the senior management team, supplemented with some stronger management information and overheads and controls to be able to have us have some oversight and proactivity around controlling the expense base. In part, our operating model is one that we have a level of control and forecastability in, and that gives us the ability to be able to try and manage that expense base well. But in 24 particularly, we also had that event promotion business, which is more volatile, it's more uncertain, it required a slightly different mindset and much tighter controls in order for us to be able to control the expense base there. So that the main driver of our success in 24 was being able to control expenses so they didn't rise proportionately to the growth in revenue. That was really the engine room of our turnaround. We're really pleased to have been able to have landed that within the 12-month period because it allowed us to be able to book what is now a break-even position in 2024 and deliver that $1 million turnaround from the prior year.
Yeah, obviously insurance really important for the motorsport sector. I mean, we know insurance costs have gone up substantially across all of Australia and around the world. I mean, how big a cost has that been for you guys to manage?
Yeah, it's a significant cost base for us to manage in the Motorsport Australia P&L. It makes up a significant part of our cost infrastructure, and it's a part that also has risen dramatically over the last few years. I'm sure many people will have a sense of feeling it in their own lives in terms of the increase in insurance premiums across the board. The insurance markets globally are quite volatile. They're under pressure from big claims events across the world. And that means that we're seeing premium increases. And Motorsport Australia's position has been one of acute premium increase over the last 5 years. Going back to 2020, insurance was a $600,000 expense for Motorsport Australia. If you fast forward then to 2024, that same line in our expense sheet was $2.7 million. So a dramatic increase in expense, in part fueled by the global markets, in part fueled by also some significant claims that we had over the last few years. It was a drag overall in terms of our premium and our risk profile. We did some good work with the insurers and the London syndicate that underpins our insurance program. And in 24, we were actually able to book a very small saving on our insurance premium year on year. But we are conscious that we still live within these quite volatile insurance markets. It's a significant component of our expense base. So therefore, it's a significant focus of management's time and effort to be able to best present our risk profile to the London syndicates and ensure that our insurance remains comprehensive and affordable for the members.
Sunil Vohra, Chief Executive, Motorsport Australia, thanks for coming on the show.
Absolute pleasure. Thanks, Ed.
And that is it for Business Weekend this Sunday. Up next, all the latest news right here on Sky News. Business Weekend returns next Sunday, but don't forget you can keep up to date with all the latest business news with our daily program Business Now, 4:30 p.m. Eastern Time, and via our website skynews.com.au. Thanks for your company today. I'm Ross Greenwood. We'll see you next week.